Most people think a trading account dies from a lack of knowledge, but that's rarely the truth. Most accounts die from a single moment of certainty. Meet David. David wasn't a gambler. For 6 months, David was the model of discipline. He started with $1,000, money he had saved from working extra shifts, money that represented his ticket to a different life. For 180 days, David followed his edge. He lived by his journal. He risked 1% per trade. He watched his $1,000 grow slowly, painfully, into $5,000. He had survived the news spikes, the choppy ranges, and the psychological warfare of the markets. He felt he had finally mastered himself. But $5,000 is a dangerous number. It's the halfway mark to $10,000, the big league number David had dreamed of. And on one fateful Wednesday, the discipline that built his empire became the very thing he decided to burn down. It was a London session open. David saw it, a perfect A-plus setup on the GBP USD. The structure was there, the liquidity had been swept, and the displacement was aggressive. But David did something he hadn't done in months. He started calculating not his risk, but his profit. "If I hit this one big," he whispered to his empty room, "I hit $10,000 today. Once I'm at 10K, I'll go back to being disciplined. I just need this one shortcut." He abandoned his 1% rule and loaded up a position risking 10% of his entire account. He set his take profit, TP, at a level that would bring his balance to exactly $10,000. He placed his stop loss, SL, where the chart told him he was wrong. He felt like a king. He felt invincible. Then came the high-impact news. Suddenly, the screen flashed red, a violent spike against his position. Price raced toward his stop loss. In the past, David would have let the trade hit the SL and walked away. But today, $5,000 was on the line. As the candle wicked just pips away from his exit, panic, the great enemy of the trader, set in. "It's just a stop run," David told himself, his heart hammering against his ribs. "The banks are just hunting liquidity. If I just give it a little more room, it'll turn around." He clicked the mouse. He dragged his stop loss. He had just committed the cardinal sin of trading. He moved his stop in a losing trade. Price didn't reverse. It feasted on David's indecision. Every time Price approached his new stop, he moved it again. "Just 5 more pips," he pleaded. "It has to reverse soon." He was no longer trading a strategy. He was negotiating with a market that doesn't hear, doesn't care, and doesn't negotiate back. Finally, the market hit his final desperate stop level. In that single move, David didn't just lose a trade, he lost his sanity. He watched in horror as his $5,000 account plummeted. But the worst part, the psychological twist. Minutes after hitting his stop, the market did exactly what he originally predicted. It reversed with incredible speed, crashing down through his intended targets and sailing right past where his $10,000 TP would have been. If he had stayed disciplined, he would have been okay. But because he moved his stop, he was stopped out at the absolute top of the wick. David was shaking, his vision blurred. The trader's fever had taken over. Anger replaced logic. "The market stole from me," he thought. "I'm going to take it back." Without waiting for a setup, without checking his higher time frames, he slammed into a new position. He doubled his lot size. He was revenge trading, the fastest way to turn a bad day into a dead account. Within an hour, the market moved against him again, another $2,000 gone. By the time the sun set, David sat in the dark. His $5,000 account, 6 months of blood, sweat, and discipline, was sitting at $1,000. He had erased half a year of progress in 6 hours. The next morning, David wasn't a trader anymore. He was a broken man.
He looked at the remaining $1,000. It felt like an insult. It felt like a reminder of his failure. Instead of accepting the loss and rebuilding, he decided to end it one way or another. He opened a trade with 50% risk, no stop loss. "Let the market take it all or give me back my life," he muttered. It took 15 minutes, a small fluctuation in price, a minor pullback, and the screen flashed the words every trader fears: margin call. $5,000 to 500, then to zero. David sat in his chair for a long time after the candle stopped moving. He thought about the dreams he had tied to that money, the debt he wanted to pay off, the freedom he almost tasted. All of it was gone, not because his strategy failed, but because he couldn't handle being wrong. He realized too late the stop loss isn't there to hurt you, it's there to protect you from yourself. David went back to square zero that day, not just in his bank account, but in his mind. He learned the hardest lesson in the game. The market has no mercy for those who refuse to accept a small loss. It will eventually force you to take a total loss.
And that was the day David understood something he wished he had learned earlier. The market did not hate him. The market did not target him. The market did not care. It simply followed its nature. What destroyed his account was not a bad setup, not bad analysis, not bad luck. It was one moment where he refused to accept being wrong. One moment where fear spoke louder than discipline. One moment where he moved his stop-loss and broke the rules that protected him. That day, David lost more than money. He lost trust in himself. And the hardest truth he learned was this: the market only needs one mistake. You need perfection every day. Silence returned to the charts, but the lesson stayed with him forever.